Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Kevin Davitt, head of index options content at Nasdaq, to discuss if the tide is turning as the market focuses on Q2 earnings and perhaps lower terminal interest rates in the U.S. Kevin, it's great to see you as always. Welcome back to Trade Talks.
Thank you, Jill. It's good to see you as well, and thanks for having me.
You got it. We're moving into the second half of the year. I'm sure many investors are happy to leave the first half behind. Can you give us your perspective on Nasdaq 100 performance and outlook?
Yeah, I'd love to. So, as you kind of alluded to, big picture, the Nasdaq 100 is lower by about 25% year to date. But about a month ago, when I came on here, the index was down about 32% on a closing basis. So it's been a difficult first half, but July has been strong. And so that's arguably a perspective situation, glass half empty, half full. But more than half of the NDX constituents are down more than 50% from their Jan 2021 highs. So it's been messy underneath the hood. And then taking a look at a visual, this thing focuses on a couple of the household names that make up a big part of the NDX. So Apple is lower by about 15% this year, Microsoft around 23%, Amazon 30%. Meta is off by that 50% mark, and Netflix is down a little bit less than 67% after earnings yesterday. So the takeaway from my perspective is that macro hedges have been valuable in this environment, but maybe that tide is turning as the market starts to focus attention on earnings and, like you mentioned, maybe lower terminal interest rates.
And so, Kevin, let's talk about earnings for a moment here. You know, if you're catching this on July 20th, we have Tesla reporting after the bell, and we have all the tech heavyweights next week. What are your thoughts there?
Yeah, you're absolutely right about the next week and this evening. So as you know, my focus generally gravitates towards the overall index as opposed to specific names. I'm always keeping an eye on activity in the NDX, XND, NQX, and VolQ. But the tone and the forecast from some of those bellwether firms that you mentioned can shift the narrative for the whole market. So it's certainly too early right now to argue that the cycle, that tide has turned. I mentioned earlier, Netflix reported yesterday. We'll have Tesla tonight and those handful of others next week. So we ought to have a much clearer picture by early August. But it brings up an interesting point from an index perspective. Now, when you look at earnings and volatility, the NDX complex is unique in the sense that historically there tends to be an increase in realized vol for that index around earnings, whereas the S&P 500 realized vol tends to decline, and that tech concentration kind of generally explains that divergence. But it can present opportunities from an options trading standpoint, so we'll have to see how it plays out.
And in addition to earnings, we have an interest rate hike decision on the horizon as well.
We do indeed. So it's not exactly just sit tight in summer markets. We're kind of back in that environment where every Fed meeting is like the most important one ever. So following last week's kind of hot inflation data and word out of some Fed governors, the market started pricing in the possibility of a full point hike, so 100 basis points next week. Right now, as it stands, the odds are we get a 75 basis point move, but the 100-point move is not out of the question. I think their forward-looking statement will be critical, and the market now anticipates the Fed to stop hiking rates when Fed funds are around 3.5%, and that terminal rate was much closer to 4% a month ago. So big picture, the market kind of believes that inflation will slow in the second half of the year. You've seen some things like used car prices, energy prices come off recently. Housing demand has slowed. So those could be the catalyst for lower inflation numbers in the next couple of months.
And you brought up volatility earlier. To wrap up here, give us an update on what's happening with the Nasdaq 100 volatility index, the VolQ.
Sure. So the VolQ index, I'll just refresh those. It's a dynamic indicator of at the money implied volatility. So forward vol based on the Nasdaq 100 index options, it's measuring right around 29 today. So based on that level, the NDX options are pricing daily expected moves of about 1.8%. Now, for those interested in exposure to NDX forward vol, you have VolQ futures trading as well as VolQ options. And this morning we had our first cycle of options expire and cash settle, so that was exciting. The August cycle are listed and available for trading, and there's tons of information on Nasdaq's website about the product. Thanks for asking.
All right, you got it, Kevin. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.